Okay, so I wanted to circle back and focus strictly on targets after you've identified something like the 3-bar reversal. So specifically, we are going to deal with the 3-bar reversal, which I've made the cornerstone of my confirmation. And it's very important that you really understand how to target it. Now, I've talked about this on many other videos, but I don't know if I was able to just come key in and focus in on it and show you why it's so important and how effective and efficient it can be when ensuring that you have good quality trade setups, and so that you can filter out the ones that you don't want to take. Okay, so in this example here, you can see the 3-bar reversal setup clearly, where you have in this case, this is going to be bullish, but bearish engulfing candle, followed by doji, okay, low shadow, upper shadow, small body, followed by trigger bar and entry closing right above the doji. Okay, so that would trigger, okay, it's time to go. You would enter this at market. When you identify that, you could probably even do it when the doji is forming. Okay, let's say the doji is formed, but the third candle is not closed. You could start setting up the target. Typically, that's what I do. If it's even looking like it's close, it's getting close enough, it looks like, okay, I got other things that'll tell me whether we're likely to get that trigger bar to close above it. But automatically off top, okay, when you've identified this setup, what you would do in this case is look left to the recent high, not the highs right here, because that's not gonna get you the risk versus reward that you want. And plus, the way that Fibonacci works, you'll see you want to go all the way back to the recent swing high. In this bullish example, the recent swing high to the swing low, right? That's going to be wick up here to the wick down here, and look for the 618, okay, which is here. So right here, that's going to be your target. And again, remember, what we want to do is we want to focus on the risk versus reward. This is where you are going to identify whether you want to be involved in the trade or not. So I take the long short position tool, I place it where the entry is going to be, which is at the close of the trigger bar, which is where you will be entering. Okay, and set the stop. Okay, some people might want to be a little bit more conservative and give it more room, but a lot of times these things, when they win, which is a very, very high percentage of time, you really don't need to. You can really set the stops right up under the low. Sometimes the low will be the wick on the engulfing candle, sometimes it will be the wick on the doji, but one of those two is going to set the stop loss. Okay, so you could get as tight as you want on that. You could give it some room to breathe. If it comes back and gets you, you were going to lose anyway. Okay, so you can't say, oh my God, I had it too tight. If it was down a little bit more, then I would have won. No. If it came back and stopped you out, that's exactly what you want, because you want to lose as little as possible. And then for the target, you want to push the tool up to the 618. Okay. Now, here's where more trading psychology and discipline comes in. Okay, this example right here is a 1.97, almost a 2-to-1. That's really all you really need over your trading career in your portfolio to be profitable, is to continue to hit more than basically calculated. It's like a 1.25-to-1, but this is almost a 2-to-1. So what this allows you to do is, even if you lost, let's say 3 trades in a row, but then you won 3 trades in a row after that, you're still going to be up, okay, versus being down. So you can see, oh, another thing I wanted to mention is a lot of times that 618 retracement will match up with structure, with previous structure. In this case, yeah, you could say it because you could see it here. Sorry, I had to scrunch up. But when we get to 618, there is some minor structure there. Not saying it's going to come to major structure, but you will see some structure there, okay, which is what you should expect price to seek. So that's why you probably really wanted to understand why the 618. It's because the 618 retracement is usually going to move towards some point in structure. That's why. So I wanted to break this up to show that it could be done on any asset in any market. We started off with Forex, that's euro dollar, and I showed you. And again, just to break it down, once you've identified, you go straight in and see what your target looks like. Swing high to swing low, 618, you know that's going to be it. I wouldn't suggest moving away from that, okay, and trying to stretch it and reach it and make it do other things. Let me give you an example. You could say, I want to target the 786 for a even greater reward, and that would have happened too on this, okay? That would have been as well too, and then price action rolled over. But the thing about it is, there's really no structure there. It just happens to be the rest of the liquidity in the trade. And then plus sometimes over time, backtesting, you'll see that sometimes you don't get to the 786. So you really just want to leave it there. 786 would have been a 2.75, almost a 3-to-1, but the 618 would have been just fine. So that was euro dollar. Let's move over to another Forex pair. Let's look at dollar yen. Now this one is going to be slightly different because this one we're bullish on this one. We were bullish on this one, but let me show you the difference. This second case on dollar yen, okay, let me come in. I know that's a little hard to see, okay. The target is going to be different on this, and I'm going to show you why. So we have bearish engulfing candle, followed by doji, upper and lower shadow, small body. I wish it was a little bit better, but that's okay. And it's still a doji. And then trigger bar closing above the doji for your entry. Okay, on this one right here, you wouldn't go swing high to swing low and look at the 618, which you see price action did want to go to 618. Okay, you wouldn't want to do that because this trade doesn't offer the type of risk versus reward that you would typically be looking for. This one is a 155. That's good. That's good. But when you understand Fibonacci, you can do some other things. You can scroll in a little bit and you can see that it's trending, okay? And the same way that something like a 618 retracement works, the same way as the 127 extension works. So for this case right here, what the trader would do is look at swing low to swing high and looking at the 127. Okay, of course that seems like a more aggressive way. This small 618 retracement off the high to low, yes, it would have worked. Yes, it would have been more than a 1-to-1 or 1.25 to 1. It's 155. That's fine. But this is where your trained reticular comes in to notice and identify that you're in trend, and this is simply just a pullback. So if this is simply just a pullback, then you're gonna want extensions off the low to the high. Okay, now you can get aggressive on those extensions too. The 127 extension is kind of where you want to be. Some traders are going to want to get a little bit more aggressive and put that 1414 extension on there, which would hit as well. So let me show you what the extended targets would have looked like if I grabbed the long short tool and I put the long short tool here at our trigger, and I put our tool or stop right up under the lows, which in that case was off of the engulfing candle, and I target the 127 right there. Okay, so doing it this way, this is 4.69, almost 4, you're pushing almost it's probably a little bit more off that. Yeah, 4.8, so almost a 5-to-1. And then if you do happen to go with something as extreme as the 1414, you are absolutely going to get, in this case, 6. It says 6-to-3. So that would be the most favorable. But one, I wanted to just segue for a second and suggest that I've heard traders and mentors and gurus and stuff just plot out a piece of a point in structure, and a lot of times, yeah, that can work, but it might be like a 1-to-1. And I do hear teachings, and I'm sorry, but I'm going to have to say this, I do hear and see teachings saying just put it on 1-to-1. And if they were to go back and do their research and just do a deeper dive into that, they would find out that that doesn't work. You need more than a 1-to-1 to cover the slippage and to cover times where you're on those losing streaks and those drawdowns, because they are going to happen. I don't care how good you are. Okay. Let's move on. Let's look at a stock, or let's look at the SPY, not a stock, but let's look at the SPY index real quick. And this one happens to be in trend too, so we're not using the 618. We're using the 127 extension on this one. It's going to be another extended example. Again, we're going to use extended example because we are in trend. So there's no trade here. There's no targeted trade of swing high to swing low 618 in this setup here. It's just not possible. It's just it's just not there, in terms of the trade. But what is there? Okay, identifying. Let me do the breakdown first. Bearish engulfing candle, the yellow guy, okay, followed by doji, really nice doji, almost no body at all, followed by trigger bar and inchy, big bullish engulfing to the other side, saying, hey, look, there's a lot going on, pretty exciting stuff. Okay, so then what the trader's going to be able to do is go down to the swing low here, to the swing high, where the 3-bar formed, that swing low to swing high, and look for the 127 extension up here. That's going to give the trader a trade. Remember, it's up to the trader's discretion. You can probably go with the 1414 as you see there. I'll bring it on just for the sake of the video, but I'll bring on the 1414, and let's look at it with the profit targets, okay, with the long position tool. Entering here when the engulfing candle closed, the trigger bar, and looking at the 127 right here. And then stops right up under the wick. Now notice on these, of course, yes, I am showing you winners. I need to do a video on when this thing fails, which I've only seen it fail a couple of times, but stops right up under the wick and targeting the 127. This one right here is 1.96, almost a 2-to-1. Or if the trader wanted to be, that's too risky. That's too risky. Let me tell you why. Trying to get up there to the 1414, okay? Trying to get up there. The good thing about it is this trade is a killer 2.8. It's almost a 3-to-1. But if you notice, you don't get it, and then you're in this trade. We're on a 1-hour chart, and then for several hours, maybe even a whole day, price falls back. It's like 1, 2, 3, 4, 5, 6, 7 hours. That's almost a whole trading day, only for him to again start coming back, take maybe 2 trading days to, this is why, okay, to try to go get the 127 and still not, and fall back, okay, and then on and on and on. Yes, he finally does get it here, but ladies and gentlemen, you don't want to put yourself through that when you could have been done here at the 127. Okay, does that make sense? Does that make sense? There's no reason to put yourself through that kind of pain. Oh, he came a couple of dollars, a couple of cents from it and ran off. Came a couple of cents from it and ran off. And then and this right here, this price action here on these days, this probably makes up another 3 or 4 days just for you to get that little small piece. When here, this 2-to-1, you're fine. You won. You take your capital and you move on to the next trade. Okay, let's look at Tesla. All right, remember, this happens on everything. So we've looked at a couple of Forex pairs. We've looked at the SPY index, and we're going to look at Tesla. So let's jump right into it. Tesla, bearish engulfing candle, followed by doji, followed by, there's a little gap, but then your trigger, of course, the gap helped you get a closing trigger entry above the doji, meeting the criteria. This probably would have scared some people, as immediately as soon as they get into the trade, they're wondering what happened as price action fell back pretty much for like almost a whole day. They enter here, so 1, 2, 3, 4, 5, 6, 7, pretty much a whole trading day loss, and they're in the red. But remember, that's why this thing is so powerful. Okay, I'm not making this video about the 3-bar reversal. I'm making it about targets, but I just wanted to take the time to show you that yes, this is where your trading psychology has to come in, because you might have to hang in there if price action does come back. But rarely do you see it just come back to the lows and wipe it out. Rarely. Okay, so I just wanted to throw that in there. All right, cool. Let's get to the targets. Okay, let's get to the targets. Targets here, in this case, there really is no trend. There really is no trend to deal with here. So this would be one where you went from the swing high, okay, from the swing high to the swing low, and look at the 618, and you see he hits the 618. right, perfect. And then what do you know, just to show you how prevalent that area is, what is it? Price continues to ride that line. Okay, so that's giving you the edification that yes, for whatever reason, the structure is there, something is good about that. Price wanted to just continue to just grind against that 618, touch that 618, and then he popped it even though he came back. But that's what they really wanted at the 618. Okay, and then just to say, was structure really there? If we go look left, okay, remember, look left, structure leaves clues. Yes, we can see why. That's where the structure kind of like was, that it wanted to continue to deal with. And then you notice it also had to break that, and then it's still even dealing with it there. Okay, so back to the target, swing high to swing low, looking at the 618 and just grabbing the long position tool. And our entry would have been here, and our target would have been the 618 retracement, and our stop would have been up under the low or the wick. And in this case, this one is 131. Okay, so a little bit better than a 1.25, but this should still fit very tight rules of at least a 1.25 or better. If it's not at least 1.25, I won't take it. This is 1.31. So good work. That was Tesla. Just to show you guys, yes, this happens on every market, every asset. It really doesn't matter. But now you're learning how to key in and focus on how the targets are probably most important than anything. What does it matter identifying if you don't know how to protect yourself and how to get to target and get out, how to get in and out the trade? It doesn't matter. So one more, a lot of people like to trade gold in the Forex space, of course. So on this case, we're going to trade this pullback and we're going to be looking for extensions. Okay, so here we go again. Big yellow bearish engulfing candle, nice doji in the middle, upper and lower wicks. I wish the body was a little bit more flat, but that's okay. Still a doji, and then entry bar, trigger bar, and entry candle closing right above the doji. Okay, so with that right there, so this is where your eyes have to come into play. Okay, you're not gonna come from the high wick to the low and just look for 618. Really not the trade you want. You want to come from the swing low right before it. Okay, swing low to swing high, 127 extension. Okay, or I know there's some traders out there that want to get aggressive, so we will go ahead at, we'll be courteous and throw it in there. We'll put on the 1414, but let's just look at both of them. For the entry to the 127, the 127 is going to look like that. Okay, and stops right up under the wick. Okay, all right, and that one is 3.77, so you're really pushing a 4-to-1. And then let's look at the one with the 1414 target, even though, listen, in this strategy it's really the 127, but I know you guys can't help it. I'm really not doing you guys any justice by feeding your hunger to get more, but I'm a nice guy. So in this case, this one is 4.2, so you're approaching 5-to-1, and he does get it. And now I will say, a lot of this stuff is up to you and your discretion. This is how I've designed my trading system. This is how I target. You could say whatever. You could say, whenever I get this, watch this. You could say, whenever I get a 3-bar reversal, I want full max 1618 targets. Watch this, people. You could say, if I get a 3-bar reversal, I want the max of the max. You absolutely couldn't do that. There's nothing wrong with it. And in that case right here, we're doing the 1618 extension. That one, it gives you a 5-to-1 risk versus reward. So yes, it can be done. And guess what happens at the full max here? You're going to finally get exhausted at that point. And price action is going to roll over. Can you do that? Yes. Is it recommended? Nah, I wouldn't recommend it. But I can understand how hard it will be for some traders to control that impulse and not want to go that route. Okay, it makes me wish I wouldn't even showed you that, but it is an alternative target, so there's nothing wrong with it. But at this point, you are leaving yourself at risk of being exposed to the market for too long. I'll put it like that. Okay, very, very risky. Okay, so that being said, I hope this helps some of the traders out with their targets if they happen to find themselves using the 3-bar reversal as entry. I can't really say how you would pair it up with other trading techniques, but for this one, this is how it goes. So if you like this video, give it a thumbs up, share the video if you know a trader that this can help. Subscribe to the channel if you're not subscribed, and turn the bell, hit the bell icon so you can be notified when other videos come out. Last but not least, if you want to see more information like this, head on over to the Harmonic Trading Academy playlist, where there's now 35 classes of this depth and higher. 35 classes free on the house, no gurus, no mentorships, no payments, no discords. Okay, 35 classes in the Harmonic Trading Academy, and we're just going to continue to grow that out. We want to make sure that you traders, new, old, seasoned, veterans, etc., have everything that you need to be successful in this market. So with that being said, you guys be good, take care of yourself, and I'll see you on the next video.